Hi guys, welcome to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a good morning given the fact that we had a mixed close on Wall Street and Asian markets are fairly mixed, but the Nikkei is hinting at positive cues. And of course, we have the Fed decision later tonight. So it's decision day when it comes to the interest rate trajectory by the US Federal Reserve. Expectations are that we could see a 25 basis point rate cut, but 50 basis point is also on the table, can't be really ruled out. And if that happens, of course, we could see a fresh leg of a rally across global equities and maybe our markets as well. Lots to watch out. Expert then on the show. Joining me is Ajit Mishra, who's from Religare Broking. Ajit, great to have you on the show. We've been hitting fresh highs. We've been clocking in record closes as well. But the moves have been fairly range bound, and there is some bit of caution ahead of the Fed rate decision, right? So in terms of levels today, what would you be watching out for? Are the charts looking bullish or bearish? And for the day, how should you trade into Nifty Bank, because it is the weekly expiry today as well?
Yeah, good morning, Nandita. So yes, it's been like 3 days in a very tight range that what we are seeing the index hovering in, and the good part is that we are not seeing any damage to the trend. Means we are seeing more of time-wise correction in the market before the important event that is scheduled tonight. So I feel that as long as we are maintaining this tight range, consolidation around the record highs, the favor or the bias will remain on a positive side. So 25,550 is what we are eyeing as an immediate hurdle for the index, and we are very close to that mark. So before the event, at least, because in the last 3 days we have not seen any action, I still feel that it's a buy on dip market, not to go ahead and jump into a trade on early uptick. So any dip towards 25,300 to 80 zone is a good area to look for fresh longs in the index. And since we have an important event lined up, I would rather suggest to prefer hedged position instead of going outright longs in the index. So through bull spread, like buying 25,400 call or shorting 25,600 call, something of this sort is something that trader can prefer. Banking, after the prolonged underperformance, we are seeing a catch-up move, though we still way to go when it comes to the record highs in the banking index. But I feel that before this weekly expiry, we have done a pretty good job, especially from the private banking majors. We have seen decent recovery last week, and we are seeing the follow-up buying as well. But closure to this 52,400 zone is something that we have the immediate hurdle. So here also I would suggest one should wait for any intraday dip. If we get any dip towards 52,000 zone, that's a good area to look at for intraday buying. And as I've said that, for positional trades, one should refrain from aggressive long in banking as well.
Okay, that's to you then. But one stock that I want to talk to you about is ONGC. That will be in focus, given the fact that the government has scrapped the windfall tax on crude oil production. But given the fact that crude, has cooled off quite a bit, and had fallen below that $70 per barrel mark as well. ONGC, has been under pressure. Upstream oil companies have been under pressure. So this will come as a relief for ONGC, this particular move by the government. But the stock has not done well in the last 1 month. It has shed somewhere around 10 to 11% or thereabouts. Do you think it's a good time to get into the counter, because this bit of good news will play out on the stock prices as well?
So Nanda, we feel that there could be some rebound, some bounce, but if you see the entire PSU basket, majority of stocks are reeling under pressure after the phenomenal surge that we had for almost 2 years in most of the PSU name. So I feel it's a normal correction, healthy correction that we are seeing across the PSU basket, and that might continue positionally, if I may say. So intraday or for a day or two, yes, there could be a bit of a rebound because we have very strong support at 287 in ONGC. So we are closer to that mark. So with that as a stop loss, one can look for any rebound toward, let's say, 305, 310 zone, but not much. So PSU as a basket is the only space where we have been recommending our clients to stay away for any fresh position or adding to your loss making trades.
Okay, but there are quite a few queries coming in on some of the PSU names. We'll address them one by one, in just a bit. But to talk about a Hindalco as well. Metal stocks, have been seeing good traction on and off. Of course, we tend to react to data coming out of China and global data as well. So, it is, vulnerable to the kind of data that comes out of global markets as well. But Hindalco in particular is in news this morning. According to reports, the company is planning to start solar module manufacturing in the state of Gujarat, and it is evaluating a 5-year plan in this particular sector, which is highly competitive now. Looking at the stock, it has given positive returns. It has been trying to hold its head above the water. Last 5 sessions, it has seen good 5% kind of an up move. And it is coming close to its 52-week highs as well, right? So 700, that level, would you call it as a crucial resistance zone, or would you say that, now it has, the potential to make or to surpass its 52-week highs of 715 anytime soon?
So, Lanta, when it comes to the metal pack, we are seeing mixed trend, wherein certain stock like JSW, General Steel, VEDL, Hindalco, they all are doing well comparatively because, when it comes to the record highs, they have hardly retraced from the record highs after, this marginal correction. And again, we are seeing an attempt of recovery. But on the other hand, stock like Tata Steel, SAIL, they are still struggling closer to their recent lows. So I feel yes, you can stay put, you can buy fresh also, and I feel that 670 is the immediate base that we have for Hindalco. And gradually, yes, it can inch toward the previous record high, and in fact, it can surpass the same also. So with 670 being the closing stop, one can go long in Hindalco, with 710 being the first target zone.
Okay, 710 could act as the first target on Hindalco, but I want to talk about VST Industries as well, because ACE investor Radhakishan Dimani has cut his stake in the stock, offloaded somewhere around 0.6% equity, recently. The stock has been fairly range bound in the last 5 sessions. It hasn't really done much. Some bit of momentum that we have been seeing may have fizzled out. But here, is there any view on this stock as to how the charts are stacked up now? Should one consider this stock at all?
So VST, Nanda, we were seeing buying industry emerging post the breakout, in the month of January, and after that, the stock made a new high also above 520 area. Post bonus, we have been seeing the stock is under pressure, and it has retraced sharply from its record highs. Good part is that we have already tested the major averages around 420 area, which is the long-term average, and we are seeing a respite as well. So I feel that it's likely to remain in the range at least for a time being now is what the indications are, wherein 420 will continue to act as a strong support, while 465, 470 zone might act as a immediate hurdle. So risk reward is not in the favor of aggressive longs. Yes, you can accumulate in the range of 430 to 440, with 420 being the stop and 465, 470 being the target zone.
Okay, those are the levels to watch out for on VST Industries. But just about a minute to go for the markets to open. What would you be keeping on your radar in terms of trading picks for today and the next couple of sessions, Ajit?
So Nanda, I'm comfortable with IT majors largely because if you have noticed that majority of the IT majors, they are trading close to the record highs in a very tight range before the event also. And since we expect some volatility post the event, so less volatile, low beta counter is something that one should prefer. So Infosys is the stock that we have on our list, wherein we are seeing a possibility of fresh traction in a couple of days. So 210 is what we are targeting as a immediate target, with 1928 being the stop loss. Another stock that we like is Havells. Again, major consolidation range breakout followed by gradual up move, and this marginal retracement is again offering a buying opportunity to those who have missed the chance earlier. So for Havells, we are targeting 2100 mark. So with stop at 1950, one can go long in Havells as well.
Right. So those are the trading picks coming in from Ajit. We have the first ticks coming in, and it is a negative start as was being envisaged, if expected rather. 25,400. That's we are hovering around that level. Not a very bad start, but flat with a negative bias. That's how it is. And even when it comes to Sensex, just about around that 83,000 mark. The mid cap index right now hanging on to the green territory. The bank nifty is extremely flat with a negative bias, trying to come back into the green, but early days to actually say which way it will head. In terms of other sectors, let's see which one is taking the lead today. Of course, yesterday we saw good traction coming in on the bank index, on the auto pack as well, but metals were out of favor yesterday. And then you have GSW Steel, Hindalco. These are the other laggards from the metal pack. Some of the pharma names like Cipla under pressure. You have Axis Bank as well under pressure today. Yesterday it did well, and private banks on the whole have been doing well. So these are the losers. Bajaj Auto also, after a good run yesterday, hitting a 52-week high, has come under some bit of selling pressure. What's holding out is Hero MotoCorp. That stock hit a fresh record high yesterday and extending its gain today as well. Shriram Finance is the top nifty gainer at the current juncture, 1.4%. Bajaj Finance doing well, 0.6% kind of a gain coming in there. And Tata Motors, that was among the top nifty laggards yesterday, has managed to limp back, and it's trading higher by about 0.6% or thereabouts. ITC as well was a laggard yesterday. And since FMCG names are doing well, we have ITC, Britannia and all these counters doing well. But Ajit, coming to you, ITC, what would you be watching out for here? It's been holding on to that 500 level, 0.5% higher at the current juncture. But anything in terms of levels that you would be keeping on your radar?
So ITC, Nanta, has been gradually inching higher after this strong spurt that we had from 400 to 510 area. So the pace of advance has kind of like taken a pause, but the tone is still positive. So yes, one can continue to hold longs with 500 being the closing stop, and gradually it can inch towards the record highs again. So overall, it looks positive to us. It's just that the pace of advance is going to be gradual from here on as well.
What's up with some of these IT names? I know we spoke about your picks and how IT stocks are trading at near record levels, but today so many of them under pressure. Emphasis is one stock that's Emphasis is one counter that's down 4%, top laggard on the Nifty 500 index. 3056 is where it's at. From the mid cap lot, between Coforge, Emphasis, which of the charts would you suggest is warranting a buy right now?
So, Nindar, like we were discussing about IT being the better place. So today we are seeing a downtick. So I feel it's a buying opportunity, especially with the IT majors, because there we are not seeing any sign of major distribution or a correction. So this dip is definitely a buying opportunity. I'll stick to my view that though we have opened lower for most of the IT names, mid cap IT are more vulnerable to volatile swings. So Coforge, yes, comparatively is doing well because after making a new high, it's holding around the high zone, and we may see some bit of a profit taking. So closer to around 6,800 mark is a good area to look at, because the stock has moved up very sharply of late from 5,800 to 7,000 plus zone. So around that area, definitely one can look for fresh longs, with 67 being the closing stop loss and 72 a new high as a target zone.
Okay, that's the view then. Before I move on to queries, I want to get in your thoughts on a Blue Dart. Today it's under pressure, 3.5% lower. But yesterday it saw a very strong up move, and I was talking to Jay Thakkar yesterday, and he said that there are signs of a fresh breakout and the stock will become a 5-digit stock pretty soon. What are your thoughts? In today's dip, do you think it warrants a buy?
So yes, if you are interested in maintaining longs for a month or two, definitely you can look for fresh longs, because it's been almost 2 years. The stock was trading in a very tight range, and finally we made a new record high in the last trading session with very strong price action and volume. So But yes, the stop losses are deeper because yesterday's move was exceptional. So we have stop around 84.80. Yes.
Hmm. Okay,
So with
stop
that
around
as a stop, you
84.80.
can
That's the
continue
view.
to hold the longs.
Okay, okay, got it. Okay, let's shift focus to some queries that are trickling in this morning. Quite a few. I hope I try. I hope I'm able to take quite a few of them. There's a query coming in from Muhammad. Wants to know your thoughts on Samvardhana Motherson. He already has some positions and he's making a good profit, mind you. His buying price is 71 rupees 50 paisa and he holds 151 shares. He wants a view on the stock with a 1 month time horizon. Uh, what would you advise?
So this is one of the best performing names from the auto ancillary basket, Nita. So definitely they should hold, and 190 should be his stop for the existing position, and the next target is something that we are eyeing is 210. So around that area, he can in fact trail his stop losses to 200 mark and continue to hold.
Hmm. Okay, hope that answers your query. The next one's coming in from Ajit Taneja, and he has queries on two PSU names. One is RVNL, and the other one is Garden Reach. We know that some of these railway stocks, the rally has come to a pause or a halt, you can say, and some of the defense names have also come off quite a bit from their all-time highs. So for these two counters, hold or sell, what would you recommend?
So RVNL, the definitely Nanta has been struggling in line with what we are seeing in the other railway stocks, and we are closer to the previous swing low, close to around 520 area. So that should be the stop, strict stop in case if you wish to hold this stock. Below that, it can inch toward 475, 480 area also. So definitely one should refrain from aggressive longs at current levels and maintain a strict stop at 520 for the existing position. And what was the other stock, Nanta?
Garden Reach,
So GIR SE is also
GRSE.
like yeah. So it's struggling to hold its major averages. So it's similar kind of a trend that we are seeing in GRSE also. Distribution pattern breakdown, fresh breakdown, and that might result in further decline towards let's say 1500 levels in days to come. So here also I would recommend to exit without waiting for any stop losses.
Okay, that's the view then. I hope that answers your query. Next one's coming in from Debu K on SKF, India. The stock is in news given the fact that founder AB SKF is planning to separate the automotive business globally, and it has constituted a committee to review and place appropriate proposals for separation. And the promoter company will be listing the automotive ops, I beg your pardon, on Nasdaq Stockholm, separately. So this stock is in focus. It's up somewhere around 1% or thereabouts at the current juncture when I was looking at the chart. Any thoughts here? What is the kind of level you'll be watching out for here? Should one really look at it? Because in the last 1 month, uh, the stock is up 7% or so. 5,482 is where it's at, but it's still quite a distance away from 52-week highs of 7,300 or so. Any thoughts on this particular chart, SKF India? How is the setup looking like now?
So Nanta has been almost like vertical decline from the record high. So the way it moved up post the breakout and similar traction, we saw the decline as well. And now we are again trading closer to the major averages. So there's a possibility that if we may see some respite post this consolidation and the stock might inch toward 5,800 mark. But the volumes and the price action is not very decisive. So in case if you are looking for a fresh trade, I would rather suggest to stick with the names which are trading closer to the record highs, because the move is going to be gradual and just like recovery. It's not a strong reversal. So yes, if you have an existing position, you can stay put with 5,400 being the stop, and 5,800 being the immediate target. But otherwise, you can avoid.
Okay, that's the view on SKF India. There was a query coming in from Debu K on the same. I hope that answers your query. Satya CK wants to know your thoughts on Reliance Industries and PFC. Whether these stocks can be added now with a 1 to 2 year time horizon. Would you advise?
So Reliance definitely, because if you have noticed that it's been almost nearly 7-8 months of consolidation in the stock, and it seems like that the consolidation might continue at least for you know month or two more. But the base is set, means 2800, 2850 is now the base that we have for this stock. So yes, you can look for accumulating Reliance, with a time horizon of a year or more. PFC, I would still feel that it's too early to look for fresh long, because it's been almost a vertical rise from 75 to 575 in less than a year. So now it's time for the stock to consolidate or witness some at least decent correction from the recent highs. So it might retrace to around, let's say, 420, 440 area. Around that area, definitely you can look for long-term investment, not at the current levels.
Okay, just a disclaimer, we are part of the Network 18 group and Reliance group as well. So, consult your financial advisors before taking any call on or any investment call on the stock. The next query is coming in from Kartikeya Singh. He wants to know your thoughts on Garware High Tech. I think he already has, he wants to know whether it can be accumulated at current levels or not. The stock has been in consolidation mode, in the last 6 months, it has seen a very good up move, but it has been stuck in a downtrend, in the last 1-2 months or so. Is it going to consolidate further, or is it already in the oversold zone and you could expect some bit of a reversal on the charts now? Time to accumulate?
So in fact, it's sign of distribution that we are seeing in the stock around the record highs. So if you have an existing position, you can in fact look to reduce that, and the confirmation we'll have once we break this 30-80 area. So if you have an existing position, reduce right away and maintain a strict stop at 30-80 for the remaining trade.
Okay, that's the view then. There is a query on Bajaj Housing. I know it's just listed like 3 days ago, not much data available. But what about the rest of the housing finance pack now? We saw sharp reactions coming in from the likes of LIC Housing on the day of the listing. But anything from the housing finance pack that's catching your attention? There's a query from Ajit. He wants to know particularly about Bajaj Housing, but since it's a new listing, I'm sure you won't have a lot of data to work with. But within the housing finance pack, if somebody has to look at a stock, which one would you prefer?
So Canfinome should be the candidate, because during the this IPO phase, we were seeing decent traction across the other housing finance counter as well, and Canfinome also made a new record high. It's just that we are seeing a retracement, so we are closer to the support. So around 850, 860 zone is a good buying area, with 830 being the stop, and we can gradually see the stock again inching towards a new high. So 950, 970, that should be a positional target for Canfinomes.
Okay, so Jeet, this is one stock you can look at from the housing finance lot. I beg your pardon, but let's take up a query then on Zomato. Srivardhan Gupta wants to know your thoughts on a Zomato. He holds 1,000 shares at the rate of 240 rupees per share. Given the fact that the entire investor or brokerage community is very gung-ho on Zomato, and they have outlined target prices in excess of 300 rupees. Would you suggest holding on to Zomato right now, or would you advise him to book partial profits at the current juncture?
So Nanta, this setup is still positive. Means from the record highs, we have seen marginal retracement toward the short-term averages and it's trying to form a base. So I feel he should maintain a trading stop if it's a trading position, with the 265 being the immediate support area, critical support area. Below that, yes, it can reduce further to 245, 255, 250 zone. So that might result in notional losses to him. So the prudent approach is to maintain a stop at 265 for the existing trade and stay put. In the next leg, there's a possibility that it can test 300 plus zone. So yes, the risk reward is still favorable. You can maintain your loss.
Okay, that's the view on Zomato. Hope that answers your query. But I want to ask you about a stock called Astral. Alex wants to know your thoughts. He wants to know the support level for the long term. The stock has not done anything. The last 6 months as well, if you see, it has hardly done anything. Last 5 sessions as well. I mean, it's not seeing any kind of traction. So, what would you advise in terms of a support level for this particular stock if somebody has holdings in it?
Yeah, so 1700 is the major support, based on the longer time frame, because the stock has witnessed very sharp correction from the record highs and still struggling in a very tight range. So there is a possibility that it might break the immediate support, which is placed around 1860 area. So 1700, I feel, is going to be the major support. So if you are a long-term investor, that should be the area where one should maintain your stop losses. In case of bounce, 2000, 2050 is going to be the first area of resistance for the stock. So at least for the shorter duration, the bias looks negative. So please don't add to your existing position.
Okay. That's the view then. But let's take up a couple of queries on the pharma space. I have two queries coming in from the pharma space. One is, Ravi Shankar wants to know, your thoughts on which of the pharma stocks is looking good on the charts for the long term. And a second query is coming in from Divyanshi. She wants to know your thoughts, particularly on Dr. Reddy's. I think she bought it at 7,053. Making a little bit of a loss here. She wants to know whether she should sell or hold on to it.
Among the pharma stocks, Divis Lab, when it comes to the long-term, performance, because the stock has reclaimed its record high almost after 3 years, and the overall positioning indicates that short to medium-term bias also looks positive. So yes, you can look for accumulation Divis around the current levels, which is around 5430. And positionally, now we have very strong base at 50-50 area. So that should be the stop for the long-term investor. If you are planning any short-term trades, 5200 should be a strict stop. In the next leg, possibly 5700, 5750 is something that the stock might target. Dr. Reddy's, on the other hand, we are seeing marginal retracement after the phenomenal move. It's a healthy correction that we are seeing in the stock, and it might consolidate in a range at least for a time being now. So fresh buying one should avoid. For the existing position, we have very strong base around 6470 on the daily charts. So that should be the stop loss. And once we reclaim 6700 mark, then this bias would again turn to positive. So yes, you can maintain your longs with 6470 being the stop. And once we break 6700, then 7100 should be your target zone.
Okay, that's the view. Hope this answers your queries. But last query for the day, really, this one is coming in on an HBL Power. Krishna wants to know your thoughts. He's holding 500 shares at the rate of 650. Wants to know what he should do. 626 is where it's at. He's making a bit of a loss here. What would your advice be?
So it's been, after making a new high, seeing normal retracement so far, and he bought right stock but at the wrong price. So now it might remain in a range, and the support is at 605. So if you are okay with that as a stop loss, you can continue to stay put. Otherwise, you can reduce at least half of your position at current levels and maintain a stop at 600 for the remaining trade. In the next leg, around 680 is going to be the first area of resistance, and then 720.
Okay, that's the view. With that, of course, we've come to the end of the query segment. And Ajit, I would like to thank you for taking out time and joining in this morning, and sharing your thoughts on so many charts, and of course helping our viewers navigate with their stock-related queries as well. Look forward to chatting with you again. Thanks a lot for joining in.
Thank you, Nandita. Thanks for having me. Yeah.
And of course, catch you at 3:30 p.m. on Closing Bell.